Hi, Mike 𝗍𝗶𝗳 here with 𝗍𝗶𝗳 Insurance, and today I want to talk to you about homeowners insurance. So years ago, every homeowners insurance in the state of Ohio was pretty much the same. There weren't a lot of differences in the coverage. You had some differences in rate, but all in all, they were pretty much the same. Well, in today's world, that is completely different. Almost every policy we run into is different from another. And I want to talk about some of those differences today. The number one is how roofs are paid out. So roof damage has been a big topic in the last couple of years in the business. And you have companies that still will give you replacement costs on your roof, but what's becoming more popular is that companies are putting that on an actual cash value basis. So what does that mean? That means that if you have a loss with an actual cash value settlement, they're going to depreciate that roof based on the age of that roof. In addition to that, then you still have your deductible that's going to come off of that amount. So you're going to have more out of pocket in that scenario than we used to have previously when you had replacement cost. Again, there's still some companies that are offering replacement cost, but not many, and it depends on the age of the roof. Another thing they're doing is some companies are using a payment schedule. So it says specifically how much of that roof they're going to pay in each year of the policy and how old that roof is. Another big one is deductibles. So, years ago we used to see a $100 or $500 deductible. Things transitioned to a $1,000 deductible, and now it's not uncommon that you see carriers giving you a $2,500 deductible, or that's their starting point. Some companies that offer a lower deductible still of $1,000 will tell you that on a wind and hail loss, you're going to have a $2,500 deductible. Obviously, if you want to take on more of that risk, you can go with a higher deductible, but it's not set in stone. The other thing we're seeing is a percentage deductible. So some carriers are going to give you a 0.5% or a 1% deductible, and that's a percentage of your dwelling amount. So if you have a $400,000 home with a 1% deductible, you have a $4,000 deductible on that. When we talk to clients, a lot of people are surprised when we point that line item out to them. The other thing we want to talk about are some of the optional coverages that you can get under a homeowner's policy and that are often overlooked. So one of those is water backup coverage. If you would have water backup from a failed sump pump and you have that water in your basement, you're going to have the cost of getting that out, you're going to have the cost of drying that out, and then anything that's damaged, so flooring, walls, and then any of your personal property down there has got to be covered under that limit. What we're seeing right now with inflation is that people don't have enough coverage there, because what used to be covered at $5,000 now is costing maybe $10,000 to get done. So looking at that line item and making sure we have the appropriate amount there is important. Another of those optional coverages that we look at is service line coverage. You're starting to see this being advertised by a lot of the utility companies. And what it is there's a loss to your utility from the house to its connection point. And what we're talking about are electric lines, gas lines, sewer lines, and water lines. So for instance, if that water line ruptures between your house and the street, that isn't covered under your standard homeowner's policy, but this service line endorsement will pick that up. It's much more affordable to buy it on your own on your homeowner's policy than it is to buy that from each of the utility companies. Another item is equipment breakdown. Equipment breakdown would be the mechanical failure of something in your house that's plugged in. So for instance, your furnace. Let's say your furnace has a 3-year warranty on it, but in year 5, it has a mechanical failure and it's done and it needs to be replaced. So again, your homeowner's policy does not automatically pick that up, but if you carry the equipment breakdown endorsement, you now have coverage that's going to take care of that. Typically with equipment breakdown, if that item has met its useful life, that's not going to pay. It's more for that sudden thing that happens in between. Another one we want to talk about is your jewelry coverage. A lot of people don't realize that there's a small amount of jewelry coverage included on a homeowner's policy, and that can vary from company to company a little bit. So we want to look at that, and if you've got quite a bit of jewelry, you want to make sure you schedule those items on the policy. When you're scheduling it, there's 2 different types of coverage. You have actual cash value or stated amount, or the other option is an agreed value. So if you go with the actual cash value stated amount, you might schedule a ring on your policy for $8,000. You have a loss, it comes up missing, and the insurance company is going to come in, they can tell you that they can find that ring for $5,000, so they're going to settle it on a $5,000 basis versus the $8,000 that you had it scheduled for. But if you go with an agreed value policy, and the company agrees that that ring is worth $8,000, that ring comes up missing, they're going to pay you the $8,000 because they've already agreed that that's what it's worth. It definitely puts you in a better position. So if you have any questions regarding any of those things that are going on in the homeowners market, or you're interested in some of those optional coverages, please let us know. We'd love to sit down and discuss those options with you to see what we can do to help better protect you. Thank you.